Hi guys, in today's video, we're going to talk about how to beat the rate. Now, the current real estate market interest rate is around 7%, which is the highest that it has been in the last few years, right? It's the last 7%, right?
Yeah, you're around 7.
Okay, so today we're going to talk about how to beat that. And we're going to give you methods and strategies on how to get a 5 or 4% interest rate. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q. I create the first cloud-based software that allows you to put your credit repair experience in your own hands. If you're new to the channel, I'm super excited because I have a banger. In today's video, we're going to talk about how to beat the rate. But before we get into the video, guys, please like and subscribe to the channel. It allows YouTube to push us within their algorithm. It allows YouTube also to push us to a wider audience and allows us to leave these lights on. Guys, please like and subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software and start removing these items, guys, if you have anything derogatory on your credit report. Now, let's dive straight into the meat and potatoes of this video. Now, I want to dive straight in because it's a lot of meat and potatoes and a lot of substance that you're going to be able to get from this video. But today we are going to welcome our special guest. Guys, you already know he's been to the channel multiple times. I want to welcome Loan Officer Who Cares is in the building once again to give you guys that knowledge and jewels that you guys can basically take away from. This is going to be an interesting one because it's not a method that's talked about on a large scale. You know, a lot of real estate professionals that just get into the game doesn't know all of the strategies or doesn't have the longevity or the experience to give you guys a different leverage point when it comes to these certain markets. So this is going to be a very interesting video, and today we're going to talk about a strategy called 2-1 buy down. Now, you probably never heard of that, and the Loan Officer Who Cares is going to give us a full breakdown on what a 2-1 buy down is. But essentially, it is a great strategy that allows the seller to basically give you an opportunity to have leverage to get a lower rate in the beginning term of the contract. So I'm gonna let Loan Officer Who Cares tell you guys about the 2-1 buy down special, and we also have a down payment assistance that he's going to talk about today as well to give you guys a little input on how you can get some added income or added money to put on your real estate goal that you have going forward. So yeah, let's talk about the 2-for-1 buy down. So what is a 2-1 buy down?
All right, 2-1 buy down. Thank you guys, man. I appreciate you guys. Thank you so much. Thank you so much for asking.
Absolutely. So welcome to the channel again, man. We appreciate you, man.
Thank you. I really appreciate the opportunity. 2-1 buy down, man. It's a fixed rate loan. Okay. It's the type of financing that lower the rates. Okay. The interest rate on the mortgage for the first 2 years. Okay. Thereafter, it goes to the regular rate that we lock in, but we finance them and we do the qualification based upon the current market rate.
Okay. So basically, what that means is that the current market is around 7%.
Yeah.
So he's going to get you locked in at a 7% rate. So you basically going to still have a 7% rate, but the first 2 years of the term of the contract, you will have a rate that's lower. It can be 5%, right? So 5% is going to, the first year is going to be 5%. The second year is going to be 6%. And then the third year, it will go into the fixed amount. But the goal is, guys, is for you to refinance, right? The market is going crazy right now. It is very predictable, and they are not giving way on how the market is going to change. All markets change. All markets go through their ups and downs. And basically what you are waiting for right now is for the market to correct itself, right? So the first 2 years of your loan at this point of the market can be very, very huge because it allows you to basically basically allow the market to correct itself. And if the market corrects itself in year 2, you can refinance for a smaller rate and not have to worry about ever approaching that 7% mark. Does that make sense?
Absolutely.
Yes, man. Let's talk about, so who pays to buy down?
The seller. This is a seller paid 2-1 buy down. The seller pays for it.
You as the buyer don't have to worry about doing anything or adding anything to the table to get this buy down, to get these smaller rates. So if the seller is basically willing to do it, which they're probably going to be, because the properties on the market right now are staying on there longer because a lot of people are not buying in this market. So if you have a potential seller that have a property that's been on the market for quite some time, this can be a negotiation tool that you can use to get not only a better rate, but to allow them to get the property off the market as well.
Exactly. So it works in great situations, especially for listing agents that have property been sitting on the market for a little while. Those seller pay concessions on that property for the description, people may get the phone ringing a little bit more because of that.
Awesome. So yeah, what's the difference between a ARM, which is adjustable rate mortgage, versus this? What is the difference?
Well, adjustable rate mortgage, that the rate moves, the rate goes down, and there's a range for the rate.
Correct.
Typically, sometimes it's 2% or 2.25%.
Right.
That means up or down.
Right.
With this particular program, you're already going to lock in your rate from the beginning. Say, for example, 7%. You're going to lock that in. That's secure, and we finance you at that 7. But you're going to be paying the 5 for the first year, the 6 for the second year. But the rate is fixed, and you already know what that rate is going to be from the beginning. So it doesn't move up or down.
Oh, wow. Okay. So what is your prediction on the market going forward, you think?
If so many things go kind of like some of their tea leaves are saying right now, whatever, I'm thinking the rates are probably going to start going down maybe toward the end of next year or something like that.
Okay.
And if they move around, this is a good product, if it goes that time, because it gets you in, you save some money over time, and it just kind of gets you acclimated to being a homeowner, things of that nature. So I think they're going to move down, because with rates, what goes up must come down.
We have influencers like Patrick David as saying that the interest rate can go up to 10% next year. And for those who don't know, Patrick David is a very famous influencer. He has one of the biggest private insurance companies in the country, and he honestly think that the market is going to be added another additional 3%. And if it does, this type of product is just make it just that much better, because if it does, if you are waiting for the market to correct itself, you might be waiting for a while, and you might see the market go up potentially before it comes down. And if that's the case, instead of jumping on the gun right now and getting a product like this and it's still a fixed rate, so you're not really having to worry about the price points changing dramatically or fluctuating to a point where you have no sustainability inside of the home. Right. But because they're going to give you everything that you need, they're going to give you all of the numbers for the first 2 years and the years after that.
Yes.
And the goal is to refinance. I mean, everyone that's buying a property in this market should be considering refinancing if the market goes to, a lower amount. So yeah, this is a great product. I honestly think that this is one of the many ways that you can beat this market. Having specialists like Loan Officer Who Cares, who has been in the industry for so long and have seen every type of market, every type of situation, it gives basically a lot of leverage for his clients to be able to have more opportunity and more leverage to beat a market like this and still come out strong. I think that it's a great product. I think it's a great negotiation tool actually going into the buying process, and something to really definitely consider. Let's talk about the down payment program that you have. Not only now, he is licensed in the state of Texas, but his program is nationwide, correct?
Yeah.
Okay, so let's talk about the down payment program a little bit before we get out of here. Let me know exactly, or let the people know exactly in detail what is needed and what is the benefit of it.
Okay, well, the down payment assistance program can go 600 and above, 620, depends. And what it is, how this program works, it's an FHA product. Okay. The 3.5% down payment that FHA requires, this program would take care of that 3.5% down. Okay?
Wow.
And it would be in the form of what they call a silent second, meaning that you don't have to make payments on this.
Okay.
So if you were to sell the house or refinance, then that's when that particular amount has to be paid back. But you don't have to pay that out of pocket from the beginning, so that's covered in the form of a second lien.
So if you sell it, it would just be deducted from the profit of the sale.
Yes, sir.
Okay, so you really essentially not taking any of your hard money and placing it, or to have to worry about paying any of it back.
The investor's
so you can essentially go to the if you get a down payment, if you get an FHA FHA loan, you can essentially go to the down payment, go to closing with not paying anything.
A little bit, because if you do the down payment assistance, right, and then also in this environment, because we talked about earlier how homes are staying on the market a little bit longer, the sellers are willing to give a little bit of seller credit, so that'll take care of some down payment and closing cost things for them also. So you got the down payment covered with the down payment assistance, have some closing costs covered with some seller concessions. That's how you start coming to the table with a little to no out of money and pocket, out of money.
Man, so
besides your earnest money and option fee.
Yeah, absolutely. So you got to pay the earnest money, of course. But
yes, sir.
Guys, in this video, we have explained so many different leverage points that you can use to beat this current rate. So there is no excuse. And like I said, you don't want to drop the gun by waiting and potentially watching the market just go up more and more and more, and then you just get to a potential place where you're just getting priced out. You're not going to be able to afford the property anymore, or you're not going to be able to push the button like you possibly can now. This is a very good opportunity for anyone that's looking to get down payment assistance or looking to get a lower rate initially, or waiting for the market to turn. This is one of those products that gives you no excuse to push the button for your new home. I think that this is a great opportunity for people to look into or consider it. So if you're not in the state of Texas, please ask your real estate professional about the 2-1 buy down. I don't know how many individuals you might know about this, but tell them about this video and let them know that you are interested in the 2-1 buy down. But if you are in the state of Texas, please reach out to Loan Officer Who Cares. Give me your information, man.
www.loanofficerwhocares.com, or you can find me on social media at Loan Officer Who Cares on Facebook and Instagram. NMLS number is 111-7854. My cell phone number 281-731-0673. And if you get my information from the video, just text me 2-1 buy down so I know exactly where it came from. And I am an equal housing lender, so I'm here to help you guys out and make the process simple for you.
Awesome, man. Awesome. All right, guys. Well, that's the end of this video. Until next time, guys, please take care of your credit and take care of yourself. Credit Coach Q out.